Thank you for joining today's webinar. My name is Jess Wright. I'm Head of Partners and Clients at Sharesight. And today I'm joined by our partners, CMC Markets. CMC Markets is a broker with an award-winning platform that allows investors to choose from a wide range of investment products, from ETFs, options, to managed funds, and more, across 15 international markets. They have been Australia's outstanding value broker for 10 years in a row. CMC partnered with Sharesight 10 years ago to provide their clients with a seamless portfolio tracking and tax reporting solution. And you can also currently trade with CMC on the US, UK, Canadian, and Japanese markets for zero brokers with CMC. I got that in there for you guys. Joining me today is Andy, the Director of Stockbroking at CMC Markets. Stockbroking, and has been with the firm since 2009. Prior to CMC, Andy worked at JP Morgan and Credit Suisse, to name a few, in numerous capacities across debit markets and over-the-counter derivatives. And also joining us today is Ryan. He is the head of product for the stockbroking at CMC Markets, and has been with the company since 2006. Prior to CMC Markets Stockbroking, Ryan was also head of product development at CMC for CFDs, as well as global presenting in trading and investment education. Ryan has an honours degree in finance and has used his knowledge to present webinars on topics as technical analysing, benefits of risk management, and how to diversify across global markets. So he's an old hand at these webinars. No pressure, Ryan. Today's webinar is discussing and analysing top international stocks in the new landscape of the uncertain markets caused by the global pandemic. Andy and Ryan are going to take us through an in-depth look at the top global movers and shakers that we should all be keeping an eye on. They are going to give us an overview of the CMC trading platform and implementing research tools to help us continue to analyse stocks after today's webinar. I'm looking forward to today's webinar as my portfolio really needs some diversification in international stocks. A disclaimer before I hand it over. Today's webinar is informational purposes only and does not constitute a product recommendation or taxation or financial advice. And we recommend that you talk to your advisor or accountant to obtain the correct financial advice for your own personal situation. And with that, I'll hand it over to Andy and Ryan.
Thanks, Jess, and thanks for the plug around the CMC service. I'll just recap really in case some of we've got potential customers or even for our existing customers. CMC Markets is the second biggest retail stockbroker in Australia, and we are a full trading and clearing participant and member of Chi-X and ASX. We are known for ASX share trading, execution and clearing. We're not as widely known for our international service, which launched just over 2 years ago. As Jess covered, we offer 15 international markets or countries, which across 22 exchanges, and we've built a simple, easy to use, clean solution that allows clients or customers to hold their international shares, Apple, Facebook, Google, etc., with a lot of the ASX fables. Traditionally, we found, and looking through the data we have, that our customers' portfolios skew towards financials and materials. So typically the big banks, BHP, Rio, and then we may have some Wesfarmers and Telstra. So that's typically the construction of a portfolio, which with a few additions and stocks like Afterpay have been popular in recent years, doesn't really change. The ASX represents approximately 2% of world markets in terms of market capitalization, which is significant and important, but there are other markets out there. The US, in comparison, has a market capitalization for NYSE of 26 trillion, with NASDAQ some around 24, but there are some overlaps between stocks listed on NASDAQ and NYSE. So 2% at 1.25 US dollars trillion for ASX versus 24 trillion for the US. So there's a huge universe of stocks out there. We now offer over in excess of 36,000 instruments. And as Jess mentioned, that covers a full range of equities, some debt products, as well as international ETFs in conjunction to ASX. So that's a bit of background on why we offered the service. Jess has highlighted that we've recently followed market trend in the US and reduced our commission rates to 0 for 4 international markets, which are US, UK, Canada, and also Japan. The reason we added Japan was more experimental. I mean, we all have Japanese goods, very popular in the 80s, but it's a market that trades during our session. So for those who prefer their beauty sleep and don't want to be up in the middle of the night, then there's obviously that option to diversify in Japan. But nevertheless, we offer other markets in Asia, like Hong Kong, Singapore, as well as other European bourses. And we've added 4 additional markets on the back of customer demand, which are New Zealand, which again, obviously open in our session, Denmark, Sweden, and Spain. So there were some specific stocks that customers wanted to add to their portfolios, and that's why we included them international markets. So that's a bit of background. As Jess highlights, we've been integrated with the Sharesight solution for around 8 or 9 years. We've got a direct feed into Sharesight, so it's a bit more than just Sharesight receiving your contract note in PDF format and then screen scraping it and incorporating it in their software. It's actually a direct native feed, which we've worked with Jess and the team to establish and make sure it's solid and reliable for these additional markets, bearing in the additional complexities. But it's now seamless. I can promise you my portfolio is on there. It's a really useful tool, and we strongly recommend it, irrespective of whether you're broking with CMC Markets or one of the other great providers. So without further ado, I'll hand over to Ryan, who will run through just how easy it is to place an international order.
Fantastic. Thanks, Andy, and thanks, Jess. Yeah, it's a pleasure to be online today with you all. Yeah, international trading is becoming bigger and bigger, in respects to, diversifying clients' portfolios, and quite an important part of diversification. We've been traditionally looking at ASX stocks for quite some time, but as Andy mentioned, 2 years ago, we've really committed to providing a really comprehensive international offering on our platform. And the real premise of the development side of things was to make it as easy as possible. So actually, when clients open up an account, being able to access these international markets is very simple and easy, and we've got a huge range of tools which you can use to analyze that market. So what I'll do is I'll just have a quick look at the platform so you can get a bit of a just. There we go. So hopefully, I assume you can see that now, the CMC platform on there. Fantastic. Okay, so the platform at the moment has, when you first land on the CMC Markets platform, you've got a summary of the Australian market, which is obviously our most popular market in respects to what clients are trading. We provide clients with a huge number of tools in respects to how you can kind of analyze what's sort of moving and what's shaking the market at the moment. You'll notice at the top, we've got these movers and shakers. You can have a look and say, well, what are the biggest value stocks being traded on the market? The biggest by volume. You can also see what the biggest gainers and the biggest losers are, just by tapping on these tabs at the top of the screen. So it's a very quick way to kind of see if there's any potential opportunities based on the current market environment. But also underneath that, we've teamed up with a couple of service providers in respects to Morningstar. Morningstar provide really comprehensive equity research reports. And they also provide something that's quite, helpful in respects to, not having to do your own analysis, is they'll actually do a lot of the analysis for you. And so they've got sort of ratings based on each individual stock. And so we display this on the home screen, showing you some of the most undervalued and overvalued stocks on the Australian market here. And then, you can either get a full report. So if we wanted to see a detailed report on the stock, you just open it up. Hopefully you can see that on there now. They'll actually, provide you with, what they think the fair price should be, market capitalization, and a summary of the financial details over the last 10 years. You've also got another third party, the screener, again, giving a huge range of, different options to analyze the markets, to see, whether or not there's some stocks out there that might be of interest, trading insights, news. And then on the right-hand side, sort of like a breakdown of what's happening in the market on a global index level, and also on the indices in US, Europe, and Asia. But to access international stocks, it's really simple. I mean, you can either just type in a product name up the top. I mean, for example, we could have a look at Netflix. You'll see that it's on various different exchanges. So at the moment, the one that we'd be looking at is Netflix. Simply click on the one that you're interested in, and you'll get a full detailed summary page on Netflix, which you can use to see what the current pricing, their highs, their lows. And we also have a powerful research tab here, which will actually give you full financial details on Netflix over the last 10 years. A lot of clients, they don't necessarily understand the full sort of financials that are displayed. It's great to sort of get a bit of an overview of what's happening, and you can sort of see trends over time as to revenue, earnings per share, dividend payments, etc. And all of that information is provided to you free of charge on this on the platform here that you can view. You've also got charts. Some of you might be fundamental analysts, so you might be looking at the fundamentals, or you could be looking at the charting package and seeing if there's any trends in price action there. We have quite a basic sort of version, so if you're just interested to see what the trends are doing, you can certainly do that. We've got a huge amount of back history, or you can actually launch our advanced charts onto the platform as well. So these advanced charts allow you to do more comprehensive sort of analysis. You've got, I think it's around about 80 odd different technical indicators that you can add to the charts. You can do comparisons, so you can compare it against other products that you might be interested in. And you can even do pattern recognition, so it can automatically identify patterns for you. So for example, if you're just after a regular sort of wedge formation, you can get the pattern scanner to scan price action and find those patterns for you. So if you are a sort of more technical trader, CMC offers a huge range of features that you can use with that advanced charting package. If we go back into products and we have a look at this summary screen, to be able to analyze the international markets such as the US, if you go up into the top right, you'll see the sort of 15, 16 different markets that CMC have on offer. So we're just currently looking at the Australian market. But let's say we wanted to do and diversify our portfolio a little bit more. We could actually go and change this to the United States. And what it will do is it will automatically change all of that data just to be concentrating on the US markets. Again, it will show you these sort of movers and shakers. If we have a look here, and you can see some of the value gainers, these are the ones that are being traded the most, or the most value has gone through. And some usual culprits there, I think, come up on display. So Tesla is obviously a huge stock at the moment. It's being traded quite heavily. And a couple of days ago, it went up by almost 10%, 11% at one stage, after recently being announced to be added to the S&P 500 later in December this year. So it got a huge boost from that. It's also got NIO. NIO is a Chinese startup. I say startup, it was back in 2014, but it's a Chinese electric vehicle maker, which has had a massive probably 12 months. I think it's up, almost 1,000% over that period of time. So it's taking advantage of some of these new sort of, environmentally friendly sort of policies that are coming through. And again, with Tesla moving up, it was also a stock that went up quite significantly off the back of that. And you can see that Amazon was also part of that, and Boeing. You can also see the volume, the gainers. Again, the sort of third-party providers that we look at, such as Morningstar and the Screener, they also cover the US markets. So you'll be able to get that full analysis coming through for that as well. But if we just go back into one of the stocks, so let's say we look at Tesla, and if we go back into the summary as we load it up. Since sort of, earlier this year, Tesla's sort of jumped quite significantly. It's up 8%, as I said the other day, but this year it's actually risen by over 500% this year. It's quite a success story in regards to international stocks, or one of these sort of products that we've added recently. It's obviously a very familiar product that a lot of clients know of, but don't necessarily know how easy it is to trade on providers like CMC Markets. It's to be able to place a trade on Tesla, again, if you're interested, you literally just click on the buy or sell buttons within the platform, and it will open up the order ticket, and that order ticket you can then place various different instructions to place the order. One thing that Andy sort of mentioned before was having the Japanese market available at zero commission is great. If you're not willing to stay up later at night to sort of place your trades on the US market, there's a huge range of tools that you can set that as a limit price, and then it can work during the night, waiting for the price to reach a certain level. So instead of having to sit there watching the market, you can place a limit order, and then that will execute if the price reaches a certain level. So, you've got the tools there available in the platform to do that. One of the other tools as well that we offer not only the standard platform, but we offer a pro version of the platform as well. And you've got single sign-on to that as well. So, it gives you a bit more flexibility potentially. So this is more of a customizable platform. It enables our clients to sort of, create their own experiences. So you can fully customize the platform to suit your own requirements. So this is just one layout. You can have up to 10 different layouts that you can choose from. And again, it's got a lot of that information, or pretty all of that information that you get on the standard platform. But it gives you some more detailed charting packages. There's a lot of financial information here as well. So if you are interested in learning more about Tesla, for example, it gives you details about all the key people who is actually a part of the business. You've also got, executive compensation, how much these executives are being paid. It also shows you details on sort of the insider trading activities, so who's buying and selling stocks within Tesla, which is quite an interesting one to have a look at. I think Pfizer was an interesting stock recently that, obviously announced that they had a successful vaccine, or a vaccine that might be quite successful. And then we actually noticed that the directors, or some of the directors, sold a significant amount of shares directly after that. So, there might be something in that, but you can grab that detail with the platforms. And you can see all the valuation ratios, income statements, etc. Again, the charting package is an interesting one. As I mentioned before, looking at Netflix is another interesting product, especially over the coronavirus pandemic. It's obviously taken advantage of the fact that a lot of people are now staying at home. And so their business model is very much about, the number of people that are watching their programs. And so because we're stuck at home, it's obviously had quite a successful last 12 months, or since March. And you can see when the pandemic sort of was starting, it did have a dip beforehand. And what we've seen is a steady rise up until around about July. And then we've seen some sort of stagnation in that particular stock price. Now, if you are into technical analysis, it's got two very clear levels at the moment in respects to its support and resistance. So we're finding a support level price around about 465. And then we're finding a resistance price around about 571. So, there's a range there at the moment, which the stock price is trading at, in between. And it's currently now down at that support level. So is history going to repeat itself and that stock price look like it's going to go up in value? And if it does, is 571 the target? That's the sort of methodology, I guess, behind technical analysis. Or do we think that actually, if this vaccine comes through, more people are going to actually, be going back to work? Does that mean that Netflix share price will go down? And then we might see it break through that support level and sort of decrease in value. It's a fascinating way to look at the markets apart from just fundamentally. And if we are looking at trades generally, we should be looking at both the fundamental and sort of the technical side of trading, because these trends, timing of placing a trades can be quite important as well. So, Netflix has been an interesting one, in addition to your other ones that have been affected by the pandemic. When we talk about the pandemic, it's an interesting one because if I go back to the standard platform, some of the stocks that have been really impacted, from a positive perspective, are not just ASX stocks. They're very much these global companies that have taken advantage of certain technology. So you've got the likes of Slack, Zoom. If I go back actually to the products page, I think Zoom's there. So it's actually an interesting one because one of our third-party providers, Morningstar, has Zoom as a overvalued stock. And interestingly, it's one of the companies that did very well initially when coronavirus started, because they were set up at the time to really offer a service that we all needed now that we were working from home. But now, if we have a look at the summary page for Zoom, it did go up initially, and you started to see from March around about this period, we've seen a really significant increase in Zoom over that period. But part of their monopoly has started to be eroded over a period of time. So a number of these other providers are starting to come in and offering services that sort of match what Zoom had. And also the threat of people, not working from home potentially over a period of time, could potentially see, or we've seen a dip recently since its highs back in October. So again, is an interesting stock to have a look at based on what the global pandemic is likely to do. Slack is obviously another one, Slack Technologies. But there are other companies such as Citrix, for example. Citrix is another company that could be of interest. Citrix is something that they offer cloud-based computing. So, if you're thinking about the way that we host all this information, cloud-based computing is becoming, sort of the norm and the approach that we look at. And again, it's a great opportunity to have a look at these types of companies that, obviously the work from home culture, it may continue for quite some period of time in the future. And so, it's another stock to potentially look at, based on those developments. Some of the other areas that were impacted by coronavirus, self-quarantine or quarantine in general, we all know we're starting to watch a little bit more television. Netflix, Disney Plus, these types of products have obviously taken advantage of that, and you've seen quite significant sort of uptick in those products. Another one potentially is EA Sports. So not only is Electronic Arts... so bring that up. So Electronic Arts is more of a game console, gaming sort of company. It's, with more people staying at home as well, they've obviously got the advantage of looking at that. But if you have a look at this over a year, just bring that up, you can see it had quite an uptick again at the same time. So we saw that sort of movement on the upside. But then again, in August, October, that sort of has fallen off again. So it's some of these companies that have taken advantage, I guess, of certain global events and the coronavirus being one of those. We're actually starting to see some of those fall. So there would have been great opportunity when those events happened. And again, if we look at different events coming up in the future, the US presidential election was obviously another big event that was going to have an impact on financial services and also the markets. These are the types of events we want to have a look at, and we want to sort of say who's going to benefit the most based on who's going to win the election. So if we looked at Biden winning the election, which he did, then environmental policy will be quite different from what it is at the moment. We have a situation where Trump has removed the US from the Paris Climate Accord. Biden said one of his first things he'll do is to get them back in. So environmental products could be quite interesting moving forward. And, I think the big one, I guess, is Tesla. Its share price, again, as we mentioned earlier, has gone up, astronomically this year. The same with NIO. It's gone, through the roof. But that's more in regards to how the Chinese government have decided to change and adapt their policies to environmental policy moving forward. So previously, where they were a little bit lax, NIO has actually taken advantage of not only a sort of like a government grant or investment into their product, but the regulation in China is likely to change, in 2025. Where 25% of all cars being sold will be, electric vehicles, and they're quite well set up for a potential, to take advantage of that particular move. So, they're actually on the US exchange, and one of the more popular products that we look at, or our traders are looking at on a regular basis. Another one for consumer goods. Consumer goods over the coronavirus period has really changed because the retail market has been shut down and been hurt quite considerably by the sort of restrictions. And most things are moving online. So we're starting to see, the likes of Amazon, really sort of like take advantage of that sort of online delivery, because that's exactly where they're set up to take advantage of. So their share price from March this year up until now, you can see it's been a really steady growth since the coronavirus went through, and it's only going to get bigger. They really are a monopoly in respects to how big they are from that perspective. And again, if you're interested in taking advantage of that, then again, it really is simple on the CMC Markets platform. Click on the buy button, and you can get access to these markets as well. But you've got competitors to Amazon as well. So if we look at Alibaba Group, this is another interesting one because, again, you would think that it would take advantage of the sort of global situation at the moment. But what we're seeing with Alibaba is that it did. If we go back to the 1 year chart, just load that up. So here again, from March onwards, we've seen this sort of global uptick in these types of consumer goods companies, and they've taken advantage of that. But we've actually recently seen a drop in Alibaba during that period. So it's interesting. It's down 15% roughly from its peaks. And this, again, we need to look at the fundamentals is around about sort of like Chinese government sort of regulation potentially could be coming in to reduce the monopoly that they've got over there. So, you're looking at the chart to sort of see what that is. But if we were to look at the Morningstar report, hopefully you can see that, the Morningstar report still, based on its fundamentals, is very much showing us, that it's still it's still at a point where the fundamentals are sort of reaching the sort of new current price. But yeah, it's an interesting one. As soon as we get more fundamental data coming through, have a look at the Morningstar reports. It's a really great summary of how these markets are performing. And it means you don't have to understand the full sort of fundamentals like income statements, balance sheets, etc., which I certainly don't understand all of them. But they really give you a concise way of looking at the fundamentals and providing information. And there's also other information in there as well. So there's some key sort of products, but the last one sort of like that's quite interesting now from a stock perspective very much comes down to healthcare. Healthcare. Initially, some of the stocks to look at would have been the likes of Gilead, I think is the stock. Gilead Sciences. Now, Gilead Sciences benefited early on because they had existing drugs that were seen as potentially something that could help, and you can see that they're actually they sort of had a big spike at the beginning. But as we realised that that didn't work as well as it did, then we started to see a decline in those in that price. But if we were to look at then Pfizer, they recently announced the ability that they've got a vaccine that is around about 90% successful. And so it had a huge spike once that announcement was made. I think that it hit its 52-week high, which it was a great result for them. But then we've actually seen a bit of a fall recently because one of the concerns there is that the actual vaccine that they're using, needs to be stored at temperatures close to Mars, which obviously makes it quite difficult from a distribution point. And so, that distribution concern reduced some of that excitement that was being generated. And then some of the other companies that are coming on board, like Moderna, they're looking like their particular vaccine only needs to be stored around about 20%. So it's an interesting, dynamic at the moment, because there's still probably around about 10 or 11 other companies out there that, have vaccines close to being announced. And so we could see some movement in those stocks once we learn a little bit more about the success rate and also, how they can store and distribute those particular products. So again, this platform, provides you all the different products that, are of interest, I guess, especially at the moment with the sort of coronavirus pandemic, and also the US election results, and seeing what Biden will introduce over the next, 6 to 12 months, and seeing how that might impact policy, and also look at, these big movers. I think, Andy mentioned earlier that the ASX market only makes up 2% of global indices or market, and the US is, closer to 25%. So, the opportunity to trade in these markets is fantastic. It gives you a great way of diversifying your portfolio, but it also gives you great opportunity. A lot of these stocks, they're global brands. They're really well known. There's a lot of research out there that you can look up. So again, it's worth having a look at the US market. It's not just US though. Vodafone, if I was to look at, Vodafone in the UK, interesting one for Vodafone, especially because you kind of expected Vodafone, with more people wanting data at home, to do quite well out of the pandemic. But the biggest thing that's happened with Vodafone was that their data roaming charges were reduced significantly because less people were traveling. And that was actually something that, they made a huge amount of money on. So they're down on that revenue by about 70%. While their data at home and their phone calls were only up by 20%. So that it didn't quite come out the way that you'd expect. And so they actually had a bit of a hit once the pandemic started to unfold. But recently we've seen some news come out that potentially they're going to increase tariffs. So again, we might start to see that, that increase in tariff might bring in more revenue, which is great for Vodafone. And sort of, that's been seen very positively by the market and seen an uptick recently. So, these global events are still ongoing, and they're going to be going for the next, 6 to 12 months. So there's plenty of opportunity to trade these markets based on events coming out and results coming out. So again, have a look on the platform. You can add all of these stocks to watch lists. So if you are keen to sort of add, products, you can set up a whole range of watch lists. You can have a look at the popular products. So you can monitor these trades and these markets on a regular basis, and see what the movements are. And it's a great way of being able to monitor just the ones that you've done the research on. And yeah, I would set these up, have a look at, stocks that are going to be impacted by coronavirus or potentially Biden's, policy changes, put them in a watch list, and then sort of, monitor them this way. And you can actually have a portfolio view. So you could come in here and actually sort of say, okay, well, how many units you can let's say I think I'm going to buy AMP. I can say, the date that you bought them, the number of units and the price, and then it will give you the value of what those would be over a specific period of time. So if you didn't invest in them, you could have a hypothetical portfolio to see what they are. So, have a look at different international markets. I've given you a few today to sort of, get some feelers, add them to the watch list or your watch list wherever you are, and then, monitor them over time. But it's a really exciting time trading international markets at the moment. There's plenty of opportunity. So I'd certainly, start exploring it more, especially considering how easy it is to access these markets now on the platform. But on that, I'll pass you back to Jess.
Thank you, Ryan. That was really interesting. Lots of stocks to think about. I find particularly being British, the Vodafone one's quite an interesting one, that they didn't do very well in the pandemic, but they're obviously going to do incredibly well out of Brexit, because obviously now they don't have the free roaming in Europe demand anymore.
Yeah, that's absolutely true. I mean, that's what I'm talking about, like events and regulation. So Brexit's another big one that I didn't mention, but it was on. I think it's a weird one, because Brexit was on everyone's lips for probably years and years, and then all of a sudden we've had these two bigger events take over, and it's just been sort of pushed back into the realms of your memory. But yeah, absolutely. Vodafone, with regulation in the UK, they're going to get out of the EU regulation and sort of those caps that are possible. So they might benefit off the back of that, which is a really, really good point.
Yeah, definitely. Yeah, lots to think about. So you said that you can create the watch list, which is great, because that was one of the questions that has come in. Can you set the ability to set a price that you'd want to sell and buy at?
So yes, so if you want to, you can set that limit order that I showed before. So if you
Can you just show us, we've had a couple of questions come in there.
Yep. Am I still sharing my screen?
No, just reshare, please.
Reshare. Okay, no problem. I'll let me go back into this. So let's say we look at Netflix. So yeah, if you wanted to buy at a certain price, then you just click on the buy button within the platform. Do you get this screen come up as well? You see the order ticket? Fantastic. Okay, so here you're setting your quantity. You've got your limit price, and then you just set up the price that you were willing to buy at. So instead of it being the current market price, we might say if the price goes down to $4.60, I'm interested in buying. I want the system to do that for me automatically, and then yes, it would then be able to place that trade for you. Gives you all the sort of details there.
Yeah, another point there is, say you want to get filled on Netflix overnight, or you just want to get the open price when NASDAQ opens. If you put the price higher than what the open price is, your order will get price improvement once the market opens. So that's similar to the ASX match process, where all the bids and offers match down to get the match price. That concept is the same in the majority of international markets. So you could put within reason. You can see in Ryan's screen, the high was 487.51. If you were to put an order in of 490, and the market order opened at 487, you wouldn't pay 490, you would get 487, because you would get price improved and you get the market match price. That's a useful tool if customers just want to get set and they don't want to stay up to 11:30 p.m. Australian time. I think it's still open till 8 in the morning for the early birds, but you can let the platform do the work. It's all fully automated at our end. No human intervention. It just gets passed through and routed to the underlying exchange within fractions of a second. So that's one tip. But yeah, it's, as I say, same as ASX. And I guess one important point, probably a Q&A, I suspect, is, do I have to open another account? Because no one likes paperwork. Every CMC Markets stockbroking account is automatically enabled for international. It's the same account. So that's one kind of easy solution. So anyone who's got an account, it's ready to go.
Anyone opens account, it's ready to go. Perfect. That's excellent. The other question that we've had come through is when's the exchange rate set for purchasing on those international stocks? Yeah, so I can start as well. The exchange rate, we have a real-time feed with one of our banking partners, ANZ Bank. We have a feed which is giving us streaming FX prices, 4 or 5 times a second. So as the order fills, we grab the rate at that point. So if it fills over a couple of minutes, because your price point gets hit, the price then increases on a buy, then it decreases, you would get the averaged, the volume-weighted average FX rate. And that's really something I should really add on around our service and how we do the FX, or how the FX is calculated, because FX prices are notoriously difficult to predict. It's economic factors, the speculation. There's a million and one reasons why an exchange rate will move in the short term or long term. But it's difficult to predict and control. So the way our solution is your account is all AUD. So as you trade, we debit your AUD bank account, linked bank account. We then do the exchange rate and pay for the shares in the international market with the foreign currency. And then when you sell, we convert it all back automatically. So you get the efficiencies of the FX rate CMC can get versus a retail customer, a bureau de change. And it's all incorporated, so your money gets repatriated back into AUD. Now, that's one approach. It does make it a lot simpler. And with the example of dividends, when a dividend is paid, we automatically repatriate the foreign currency dividend back to AUD. And we do that at our wholesale rate. So it's really competitive. So you get that, maximize your kind of returns. So hopefully that covers that one, Jess. Perfect. Thank you very much. The other question we've had come in about kind of accounts is, do you automatically get access to all the research that you guys have been showing us? I can take that as well. I think Ryan's looking at me too. Yeah, you're on roll. Yeah, the Morning Star is just standard on the platform, so that works for international and domestic stocks, as does the screener, which is the simple star rating, 1 to 5, and that uses fundamental and technical data to give you a simple star rating. So you can see it on Ryan's screen there. So a stock going from 3 to 4 stars is considered a buy. When a stock is trending down, i.e. going from 4 to 3 or 3 to 2, maybe there's a reason why that's so. So again, that's an automated solution from one of our vendors, which is based out in Switzerland. There is no human intervention. It's all computerized algorithms, so it's very scientific. And it looks at some of the things that professional investors look at. So it looks at the momentum of the stock, how it's performing recently. It looks at analyst ratings. Each star is one of the different things it looks at. And then it looks at earnings and revisions of earnings. So it does a lot of hard work for the retail investor, but there is some real science behind it. And I think on our website, we do explain in more detail, or you can hover over on the platform, the star rating, and it will explain it in more detail. So it also gives you a risk rating as well. Because I think we've talked in this webinar around what's current. But international markets, there's a lot of blue chip stocks paying serious dividends, just like in the ASX. Which, if you're a self-managed superannuant, or you're investing for a longer term or for a purpose, buying a house, buying a car for your children's education, you can also evaluate your portfolio from a risk perspective as well. So it's not. You can look at the speculation. You can look at the trend as well. So big stocks internationally, just like ASX. And I think this service as well, we're not saying international is the latest and greatest. Switch to that. We're saying, well, what we've designed is really, we've designed a solution which complements your ASX HIN-based holdings. So that's really our kind of focus. And we built this solution on based on customer demand and the interviews we conducted. But we always take feedback, and we're always continuing to enhance the service. Brilliant. The other question kind of is it exactly the same trading ASX as well as the international stocks?
Do you want to take that, Ryan, in terms of the experience?
Generally on the platform, there are some restrictions. So whether or not, certain order types and everything are available, but generally just the process of opening up and buying and selling and the order ticket is fairly similar. One thing to note is that, if you are trading international stocks, from a tax perspective, you might need to complete an online form just to get the appropriate tax levels. We have that available for clients in the support menu, and they can open up their forms to get that organised. But yeah, so there may be some slight restrictions, but generally just the process of opening and buying stocks from international is the same.
Perfect. Thank you very much. We've had a question come in, and I wouldn't be doing my job properly if I didn't ask this question. How do you connect your account to Sharesight?
Yeah, so it's really simple. If you go into the account section on the platform, you've got this tax and portfolio reporting tab. So if we click on that, you can then get details around the free Sharesight portfolio tools manager. You've also got details like a tour, so we can give you a video on how you get that set up. And yeah, you just simply sign up for the account via the platform itself. And as Andy mentioned before, all of it's automated now. So, any of your sort of trade that gets executed on the platform gets sent across to Sharesight. So gets included in the portfolio and analytics tools there. So really simple process. It's just part of the account section under the tax and portfolio reporting.
Perfect. Thank you very much, Ryan. Did you guys have any closing remarks that you wanted to say? Because we're kind of running out of time.
Just for me, from a portfolio perspective, for me, when I have done these sort of sessions and sort of speaking with clients in the past, it really is an important part of diversifying your portfolio by looking at different possibilities. And ASX is a great market to trade. But there are different environmental impacts, global and regional impacts to markets, and diversifying across the globe and big days. Having some sort of diversified portfolio with international stocks is a really key part of most investments these days. So it definitely take a look.
Absolutely.
Yeah, and in closing remarks from me. We mentioned our standard platform and Pro. You can also execute international on mobile. That's just as easy and just as convenient. We are launching 2 new native mobile apps in Q1 next year, which have been with our developers right now and Ryan to make sure it's optimized for usability and good looks. But certainly international mobile works equally as well, and it's very popular. But I think in general, using Sharesight in conjunction with the CMC Markets platform, you can still drill down and do that same analysis in terms of some of them great reports that Sharesight's offer, and with our integration that we worked on, Jess, it works exactly the same. So obviously there is complexity in adding 15 markets very quickly, but we have worked through that now, and my portfolio works perfectly, so I can assure you it works. So definitely with Sharesight you can still use them tools, and they work exactly the same. Only your graphs look slightly prettier because you've got that diversity.
Absolutely. And it is, we've worked with CMC at Sharesight for 10 years now. So it is such a great solution with, on the CMC platform, you've got all of those research tools and obviously trading, and then you can come through to Sharesight to run your reports and sort yourself out at tax time. So it is kind of the perfect solution. It has kind of everything you need as an investor. Thank you very much, Andy and Ryan, for your time today. I really appreciate you joining me on this webinar. And thank you very much, everyone, for joining us and watching. We hope that you have a lovely rest of your day. Cheers, guys.
Thank you.
Thank you. Thanks.
Bye.